Hi, my name is Damon Reel with LoanBidz.com. Today we're going to talk about the fix and flip market. We're seeing a surge right now. So stick with me and you'll learn more about this particular market and how it's growing. I'll be right back. All right, welcome back. So we're going to talk about fix and flip and where rates are, where fees are, where your leverages are, meaning how much you can borrow. So first of all, I just wanted to say we are seeing quite a surge in new requests for fix and flip. When a lot of markets, people are wondering whether you can still make money. I think the answer is yes, because I think some of the properties that our clients are going after are starting to become a little bit more affordable and they can find those deals. They're not going, the same day in sales for over ask. They're starting to sit on the market a little bit longer in a lot of our markets where now the investors have an opportunity to go in, make a reasonable offer and find a way to get those properties under contract. So let's talk about fix and flip a little bit. Over the last 6 months or so, rates have gone up quite a bit. Right now, our very best rates, or the best rates that we're seeing for fix and flip, are a little bit north of 10%. Yeah, you might be able to come in, in the 9-ish%, but those days of 7%, on a 12-month interest-only fix and flip, those seem to be gone for a while. So right now, we're looking at most of our lenders in that 10 to 12% range. And a lot of them that used to lend 90% of purchase, 100% of the rehab dollars are now around 85% of cost. And the question is, why did they cut that back? And the answer is simple. In this particular market, they don't know 12 months from now exactly whether the value of that property that you're fixing and flipping is going to be the same or might drop down a little bit. So what you'll see in a lot of these fix and flip lenders is a situation where they are, instead of going 75% ARV, now going 65% ARV or 70% ARV, because they want to make sure that you as the investor have a way to exit into a long-term loan should you want to. So if they give you the max leverage and that value comes down, then it's a situation where you might not be able to exit and keep it as a rental. You might be forced to sell it. In worst case scenario, break even or even worse. So that's the reason why the leverages have come down with the lenders that we see. So right now, the typical one is still around 85. We still have some that will do 90, but that ARVs are, 65, 70 now, where they used to be 75 consistently. So what I'm here to tell you is that fix and flip is still doing well, but you're going to need to make sure that you've got maybe a little bit more experience and a little bit more liquidity. So the liquidity, meaning cash in the bank, so that you can make a little bit larger down payment. And we still have options for a lot of great clients that are looking for things like fast close. We've got a few lenders that can do a really nice job at close in 7 to 10 days if you're ready to go. We also have a great lender that can defer the payments and the points to the exit. So in that particular case, it's a situation where you have a little bit less out of pocket up front. So if these are the types of things that you want to talk about, give us a call at 636-552-4710. Talk to one of our account executives and they'll give you all the details. So until next week, everyone, continue to stay safe.